The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Non-Farm Payroll Friday. We got a number, I believe it's 559,000 jobs added in the month of May. The market takes it in stride to the upside right now. Lots of impacts going on in this market. We'll kick things right off. So you have a number. Let's get into the headline number. Why not? Because it's driving all the action right now. We're talking about, 559,000 jobs added in May. The estimate was 671,000. So what we now have is we have two misses, right? Last month, a monumental miss. Some of the estimates as high as 1 million jobs added for the month of April. We come in at like 266,000, something like that. This month, we pair some of those expectations. Market was looking for, again, somewhere to the tune of 671,000. We come in at 559,000. I mean, one way to look at it, folks, if you add up what we got in April and May, we're not even up to what the numbers that some economists were looking for the month of April itself. Remember, they were talking about 1 million jobs added for the month of April. That was a big discussion. Well, you add up what we got in April and May, and we're not even at 1 million jobs, right? So you take that, then you forward that to the conversation about the Fed and the stimulus and interest rates and bond buying, and it would seem to hint to the fact that Chairman Powell probably correct that a little bit too soon to talk about tapering. We got a long way to go to make up the amount of jobs that we need. The market probably more like certainly okay with the idea that stimulus around a little bit longer than we all feared it might be. Markets catching a lift on that news. We get the S&P's up 18 points at 4209 right now. Tech stocks trading higher. We're up 83 points, 13,612. You get the Dow up 96. Dow's inching near all-time highs. I believe on the futures, we got 35,000 exactly. There it is. 35,000, the all-time high print on the futures from May 10th. We've been chopping around near that level this week. We're sitting at 34,655. The Russell up 12 points right now at 2289. We'll talk about this a little bit more. Of course, the Reddit stocks going wild yesterday. When you look at the market capitalization of some of these companies, AMC and GameStop in particular, mammoth market capitalizations compared to most of the capitalizations in the Russell 2000. They're having an outsized impact on that index itself, but nonetheless, Russell flirting with basically near all-time highs as well at 2289. Bitcoin catching some negative action this morning. Another Elon tweet out there. We'll pull this up in a moment. Bitcoin's down almost $2,000 at 36,775. Been chopping around a bit. Interesting that you're chopping around basically where you chopped around in the beginning of the year, right? Just under 40,000. We made that high early in January. You reach a high of 42,730 before pulling back to about 30,000 before you take off to the highs. The highs in Bitcoin, never forget, folks, the day Coinbase went public, not a coincidence. Bitcoin trading at 36,860. You pull up Coinbase. Remember, the reference price was $250. Pretty certain that they imagined that they would be able to keep Coinbase above that level. Not so much. Coinbase trading at $233.60 as of the close yesterday. You put it on the 15-minute, and we're down again overnight to about $229.60 for Coinbase. And we'll jump to notes and bonds as we get the jobs data. We're getting a little bit of higher price and lower yield. Market not so worried about the Fed hiking up interest rates right now. We get the yield in the 10-year flirting with a 1.5 handle. We're currently at 1.603%. But you see the spike in higher prices, 131.28. We're up almost 10 ticks in the 10-year, and we jump over the VIX. As this market persists relentlessly to the upside, folks, the VIX pulling out some of that volatility just since yesterday morning. We're at 1927. This morning, we're trading at 1709 in the volatility index. All right, let's jump into some of the jobs data. Some interesting data points over here. Bloomberg's got a great blog going on, just talking about some of the information contained with here. So when you look at, and one comment, there's a few ones that I want to point out in here that are nice. So you have the unemployment rate ticking down to 5.8%. That's the headline number, okay? You have the U6, which is the unemployment rate that's a broader term, okay? And that's I think that brings in people who might not be technically looking for a job anymore, right? There's a lot of classifications for the headline unemployment rate number that might not do a great job of representing the full scope of the economy. The employment to population ratio barely budged around 58% to hold below its pre-pandemic peak. While permanent job losses eased, the figure remains elevated. All right, getting into some of the other coins in here. Yeah, so we're still down about 7.6 million jobs from where we were prior to the pandemic, okay? But what's important to keep in mind here, and that's one of these points is made here, is that, and this is the one here. So Heidi Sharholz, maybe, Economic Policy Institute, all right? So yeah, we're 7.6 million jobs under where we were during the pandemic, but that's assuming that we have no job growth for 15 months. Right? If you want to get back to a normal bustling economy that we had prior to COVID, you need to account for the fact that there's been population growth, which would normally tie into job growth. And over the last 15 months, we would have added, call it maybe 1 million jobs. So you're really still 8.5 million jobs under the environment we had prior to COVID in terms of the employment levels that we had in that level. This is an important one, too. When you talk about, we're supposed to be seeing a rapid acceleration out of COVID, right? The average monthly job gain for the past 5 months, now it was tough, and this is where averages are going to be skewed. We're talking about the last 5 months. There were some tough numbers when you look at the beginning of the year because of the spikes we saw from the holiday season in COVID, right? January, February, some tough spikes after the holiday season, flu season, everybody inside for the cold. But nonetheless, folks, the average monthly job gain for the past 5 months is only 478,000. That's actually weaker than the last 5 months of 2021. So the final 5 months of last year, we're averaging 587,000 jobs added. The first 5 months of this year, 2021, okay, that's supposed to say the last 5 months of 2020, folks, okay? Actually weaker than the last 5 months of 2020, which is 587,000. Nonetheless, stagnant numbers, not what we were kind of talking about in the beginning of this. Now, the market is cool with that because that means the Fed's got to be in there for the long haul right now. You've heard Chairman Powell talk about it. He's focused on that jobs number in a big way. He's focused on whether it's the market at all-time highs. He is focused solely on employment numbers, getting employment numbers back to where they were, and he's got about 7 or 8 million jobs to make up. And right now we're only making up less than 600,000 a month, and that's following a month prior where we made up only 300,000. So you got 2 months, April and May, at a time when vaccinations are taking hold, that you combine the two of them and we're still under 1 million jobs added. I mean, some estimates this month were as high as 1 million jobs added. We saw the private payroll, ADP yesterday, I think it was 978,000. Non-farm payroll, not quite up to that number. The Fed has some work to do, and we're probably going to be around for low interest rates and bond buying for the foreseeable future at this time, and the market taking that in stride in a big way. S&P's up 17 points at 42.8. You got all the stocks here sitting in positive territory with the NASDAQ 100 up 79, the Dow up 90, and the Russell even up 10 points as well. All right, folks, stay tuned. We come back after the break. We got a lot to take a look at. We got some earnings out there. We got DocuSign trading higher on their earnings last night. We got the Reddit stocks going wild yet again to the downside this time, but the day is young. We'll see where they go on the open. We're going to dig into that jobs number a little bit more, show you where those jobs were added. Leisure and hospitality, of course, the biggest sector gaining jobs. We'll be right back in 3 minutes, folks. Stay tuned.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. Taking a look at this jobs number a little bit more in depth right now. We get the S&P's up 17 points. Looking at where those jobs were added, leisure and hospitality adding 292,000 positions, with the bulk of 186,000 coming in restaurants and bars. Public and private education also saw the benefits of reopening, adding 144,000. Other gains come from healthcare and social assistance, 46, and it trickles off from there. Now, when you look at where we are, I'm jumping around to two different articles here to make some of the points I want to talk about. But you get into where we are prior to COVID. Here's an update of my earlier chart. Katerina Sarajeeva, Fed reporter. Here's an update of my earlier chart looking at employment in industry since the start of the pandemic. So since the start of the pandemic, including the numbers we just got, leisure and hospitality making strides, but still down quite a bit. And I would say that might be an understatement. So, folks, you're talking about 15%, okay? That's almost 1 out of 6 jobs in leisure and hospitality is still out of business right now, not working, on the sidelines in leisure and hospitality. Mining and logging, a big one. Information, other services, government, education and health services, financial activities, the lowest of them all, basically back to where we were square before then, coming into COVID from February of 2020. Harsh numbers. We got a long way to go. And where you go from there, you know, it's going to take a while here. Yes, and this is the last one I want to talk about. So, of course, all the focus is on the Fed here. How do you interpret this data, right? The Fed's talked about employment, as I said many times. A number of Fed officials have cited the employment to population ratio. I talked about this briefly at the top of the hour. This is the point I wanted to make, though. If you look at this ratio, it's at 58%. So that is employment to population, 58%. We were at 61.1% prior to COVID. That's the number they want to get. And 3% of the entire population, folks, that's a lot of people. Okay, that is a lot of people. From employment to population, we got to rise 3% from where we're at right now. I think there is, what is there, U.S. population? 330 million, something like that? Let's pull it up. U.S. population right now, 328 million as of 2019. It pops up on Google. So you talk about if you have to rise that number 3%, folks, that's more than 9 million people right now. The population is continuing to rise over the last 15 months as COVID strikes. Nonetheless, a big number, and that's what the Fed's going to be looking for. And so what that means is the Fed's going to be in there. They're not going to be pairing their bond buying just yet. They're not going to be raising interest rates. It shouldn't even be on the table because we got to make up about 8 million jobs, folks, and we're not making them up at the pace that the economy would probably like if you really want to start talking about the Fed tapering off their stimulus that they're providing for bond buying and what they're doing in the interest rate environment with keeping rates so low. Okay, so there's our discussion in terms of what's going on in the jobs number. It's a big one in a big way, but let's jump to the other story of the week. How about AMC? So we're almost flat on the session overnight. But guess what? We know that the fun begins in about 9 minutes, folks, on the opening bell. AMC was at 77.30 pre-market yesterday. You lost almost half the value of the company. Not even almost half, right? You made it down to 37. That is cut in half. Half the value lost. But guess what? You make it all almost back by 2 o'clock, and then you give it back by the end of the day. They're going to be writing about this one, folks, in a big way. So you have the AMC CEO. He was out there on a YouTube show last night, I guess this is. Adam Aron trades. So Adam Aron's the CEO of AMC, okay? He was on a YouTube channel, Trades. So he's out here last night talking about what they're going to do, pumping out, promoting his stock as he should. You got the AMC CEO urges shareholders to support plan to issue 25 million more shares. Kudos to this guy. This is what every CEO should be doing. If you get an acceleration like this in your share price of a company that's been pummeled and is a losing company right now. So they're looking for even 25 more million shares in terms of what they can push out. Now, they just raised, I think it's about $800 million. Yes, so in the last week alone, $800 million they raised. Okay, first, the story that hit things to start things off on the week, you had Mudrick Capital. They paid more than $230 million for 8.5 million shares, okay? And then they sold them almost instantly. I have the story coming out here. I mean, look at the story I just saw pop up on CNBC already. They no longer own debt or equity in AMC. Yeah, sounds like they know what they're doing over there at Mudrick Capital because they're making quick trades. They're not staying long overnight if they don't have to. They're definitely not staying long over the weekend in equity like this. And they're coming in for the quick trade, and they got it done. It's a high-risk trade, man, in a big way, but they got it done. And then you have that they sold an additional 11.5 million shares. This was just yesterday, I believe, for 587 million. You add them all up, and they have a total of 800 million. They got an average price of almost $51, folks. That's a great price. You put this on the chart, okay? Yeah, we were well above there on Wednesday. We were over that level as well on Thursday. But my goodness, you put this on the daily, folks. There's my chart. There is $51. There is where they just sold. How many shares? How many? 11.55 million at $50+. Kudos to the executive team out there. That's what the executives should be doing. If the market's going to give you almost $1 billion, okay, then yeah, you better get it done because this company does not have that type of cash to be in the business. Yeah, so when the company announced the offering Thursday morning, it said in a filing that it may sell some of the 11 million shares from time to time. Yeah. Good luck believing that, folks. If you don't think that they were in there pushing the sell button as quickly as they could when this equity was pushing a market valuation of $30 billion, then that was a mistake to not realize that's what they would have been doing. And they got up over $50 a share. Now, what's interesting is this is the president and CEO, all right? So bringing in an additional $587 million of new equity on top of the $658 million that they've already raised this quarter results in a total equity raise in the second quarter of $1.25 billion. Of course, that's strengthening the balance sheet, providing valuable flexibility to respond to potential challenges and capitalize on attractive opportunities in the future. You look at what they might be able to do. I mean, they can basically do anything they want with this money, folks, and that's what they probably are going to do. There's a lot of articles written out here. I mean, you have the CEO literally saying, I'm trying to find, I got so many articles out here. I'll find it again. In terms of that they might do anything they want with this capital in terms of pursuing different assets, even beyond the normal movie theater type assets you would associate with a company like AMC. Excuse me. So I'll pull up the article to get some more quotes because I did have one at one point talking about that. And I wanted the exact quote from the CEO talking about how he would use this money. But, you better be aware they have this money. It's not tied to just sitting on the balance sheet. I mean, they could do a number of things with this capital that they now have. you're almost just giving executives kind of like a blank check for billions of dollars. But guess what? That's the environment we're in right now in trading. And this is what a chart of AMC looks like when you start the year at $1.91. Of course, executives are going to push out shares at $50+ and add billions to their market capitalization. I mean, folks, to tie this in, okay, to just show you how crazy this really is, you get into the fundamentals of this company and you have an easy number, 500 million shares, okay, is the total outstanding shares. This company was valued at the start of the year at about $1 billion. Well, now they have more than $1 billion sitting in the bank along with everything else, right? I mean, just craziness. All right, folks, stay tuned. We get the opening bell coming up. We get the S&Ps up 17 points. The Dow right now up 73. Stay tuned. We'll be right back in 3 minutes.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open and continuing to trend upward territory with the S&P is continuing to rise right now. We're at 42.12, up about 21 points on the session. We're up 83 points in the NASDAQ 100. The Dow right now up 113 points. We're pushing near all-time highs in the Dow, and the Russell up about 10 points as well. One final point on the AMC saga, because it is interesting, and this is kind of what I wanted to talk about. The CEO, Adam Aron, he was, as I mentioned, on with a gentleman named Trey Collins. He runs a YouTube channel, Trey's Trades, not familiar with him. But they had an hour-long interview talking about the company, and this is one of the quotes I wanted to talk about. This is the CEO. He says, if you arm us with the tool, meaning stock as the tool to go find value, creating opportunities for AMC shareholders, we can do that. Now, he's talking about they want to push out 25 million more shares to the public. If approved, the company would not be able to sell any of that until 2022. So they want to reload the coffers to have shares to be able to sell when they want to, because right now they've sold everything they had, probably rightfully so. They talk about that they had 20 million shares were initially intended to be given to AMC's upper management team, but the company decided to sell the stock to strengthen the company, and that's the 800 million that we talk about. Now, as of right now, they've raised $1.6 billion in cash from January to May. Remarkable. The company has 501 million shares basically outstanding, and they only have 46,000 shares left for future issuance. So they've issued all the shares they basically can right now, outsized, not counting 46,000. They're trying to reload those coffers. But what's really interesting is, basically this is saying that if you give us a bunch of cash, we'll find a bunch of value and we'll figure out how to be a profitable company. Very true. That's what's going on with SPACs, kind of, right? They raise SPACs. You got $4 billion SPACs out there. They say, guess what? We're going to find companies where there's value. It's kind of what's happening here. The CEO saying, hey, if you just let us raise a bunch of money at these lofty levels, we'll figure out a business plan that works. It can happen, folks, but that's just like a promise of believing in the executive team to create businesses that are not there right now. You're not basing this off anything to do with their current business whatsoever. And even the CEO is saying that if you arm us with this tool, you give us more stock to sell, you give us the stock to sell and raise billions of dollars, we'll be able to go find value-creating opportunities for AMC shareholders. We can do that. Kudos to him for believing in himself in that company. But I don't know how they're going to do it, folks. I don't know how they're going to do it at all. And AMC, let's see how they're trading on the open. Always interesting to see the opening bell. And guess what? We're catching a bid. Why not? We're up 3.9% right now at 53.36. We'll take a look at GameStop, up a bit as well. And the other one rounding out the trifecta, a little bit of complacency today, Bed Bath & Beyond up about 2.2%. Okay, let's jump around to some of the stocks that are making moves today in terms of outside of the craziness of Reddit. DocuSign trading higher this morning after their earnings last night. They beat forecast by 16 cents a share, revenue above estimates, upbeat outlook. More companies adopt its electronic signature technology. This one's not going away. Why do we have to show up in person to do anything when it comes to signing things, folks? We all are pretty well aware at this point. You can sign things remotely. DocuSign is well aware, and they're capitalizing on that. You put this thing on a daily. It's been quite a pullback. We're at the lower end of this consolidation, right? You're talking about maybe 187 has been the lower end. Today, we're up 10% on those numbers to about 214 for DocuSign, coming out with their earnings last night. Strong numbers as their growth persists. Five Below, discount retailer. They're positive in the pre-market. Let's see if they hold those gains, though. First quarter profit and revenue exceed the street forecast. Comp store sales, I've said it many times on my show, folks. It's almost bad reporting to report comp store sales compared to a year ago, a quarter ago. That's comparing it to a world hopefully we never have to live in again, folks. 162%. Of course it was. They were decimated a year ago. But nonetheless, Five Below pulling up their numbers. They beat. They're up 5.8%. They're giving back some of those gains a little bit on the open. We're as high as 192. We're at 188, but strong numbers for them as well last night. Lululemon. So how about quarterly earnings, $1.16 a share? The market was looking for 91, revenue exceeding forecast. They benefit from both the return of customers to physical locations as well as e-commerce, and they give an upbeat forecast. Lulu is their symbol, trading higher by about 1.4% right now. Quite a spike on their numbers last night before pairing some of those gains. You put this thing on a daily, kind of just chopping around towards the lower boundary line. You put it back on a 3-year weekly to see the full run during COVID. Now, this thing already had a run coming into COVID, as in you went at the end of 2018 from 110. You come into COVID at 260. All right, you were back to 260 by May. You made it to 400, but you could say kind of we've been chopping around between about 300, maybe the lower boundary line. I mean, you put this on a weekly bar, right? Interesting. Pretty tame week considering their earnings. You put it on a 15-minute, and we're up about 1% on Lulu earnings with their numbers. CrowdStrike out with their numbers. Cybersecurity company beat forecast by 4 cents a share, quarterly earnings 10 cents a share, revenue topped at analyst forecast as well. They had 1,500 net new subscribers. Internet security, all the rage these days. But guess what, folks? They give it up on the open, down 2.5%. So the market looking for a little bit more lofty expectations. I have a Fibonacci number on this one already. CrowdStrike. November, before the run really starts higher in stocks, you're trading at a price of about 118. Yeah, 118, the low there. You make it up to 251. Interesting. We get a bounce on 2 occasions on the 618, which is about 170. And you're sitting at about 210, down 2.3% on their numbers. Pretty strong numbers last night as well. And Bed Bath & Beyond. So Bank of America, they moved to a no rating. Yeah, some of these banks. How do you rate a company that's doing this? An unusual move that reflects the firm's belief that the so-called meme stock is no longer trading on fundamentals. And I would agree, folks. How do you give an analysis of something that's trading having no bearing on their fundamentals of their company? I mean, you look at how this thing is reacting. AMC, GameStop, the same way. Folks, these companies are not based on anything to do with their fundamentals. Even the CEO is saying, hey, just give us a bunch of money and we'll figure out how to be profitable. We'll figure it out. I don't know how, as an analyst, you give that a rating. You could give it a harsh rating, but the problem is it's almost a self-fulfilling prophecy in terms of if enough people believe it, which is what's happening, folks. As hard as that is to believe ourselves, if enough people believe it, okay, it's a self-fulfilling prophecy, as in literally this company was worth $1 billion to start the year. Well, in the first 5 months of the year, they've been able to sell shares and raise $1.6 billion, and they now sit on a market capitalization of, I think we're approaching 30 billion, 25 billion today. 25 billion, of course. 500 million shares. You're trading at $50. You're at $25 billion market cap. Meanwhile, they started the year off at a market cap of about $1 billion. That's a 25 bagger from $2 to 50. Easy math. This market persistent higher, folks. S&P is up about 22 points. Talk about relentless. We'll put this thing on a daily. Quite an upward channel line we're talking about in the S&Ps. We're right in the middle of that area right now at 42.13. We're bumping up against the all-time highs, though, in the S&P, 42.38. We'll check back to the Dow. Dow up about 100 points. We're right near those highs as well, 34,676. Taking a look at the NASDAQ, a little bit off those levels, but you're only talking about 400 points in the NASDAQ. Not a substantial level. And the Russell right now up about 11 points, 22.88. You're about 80 points off the all-time highs. When we come back, I'm going to talk about the point impact that the companies like GameStop, companies like AMC have put into the Russell this year alone. Staggering. You look about an index with 2,000 equities, and we'll go over the outsized impact some of these Reddit stocks have had. Stay tuned, folks. Be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. The market continues in upward territory. We have the S&Ps right now. You're trading up 25 points at 42.16. NASDAQ 100 up 140 points. That's more than a full percent right now. The Dow up about 1/3% right now, and the Russell up about 0.6% right now. What else we have going on, folks? In a couple weeks, June 16th, remarkable. June 16th is a week from this coming Wednesday, folks. Dave White, he's going to be doing a special webinar. So he just went on vacation last week. Dave was putting this together the whole week he was on vacation, folks, okay? He's going to be doing a live subscriber webinar for subscribers to any of his products. So he has his daily newsletter, The Path of Least Resistance. He has his weekly newsletter, The Technology Insider. And then he has the charting program that he put into that he created in collaboration with my dad, Tom O'Brien, The Art of Timing the Trade Charts. If any of those three products that Dave's associated with, Dave's products, Path of Least Resistance, Technology Insider, or The Art of Timing the Trade Charts, if you're already a subscriber to any of those, you will gain access free of charge as included with your subscription. If you haven't tried them, folks, great time to do it. Dave's going to be in there talking about options, folks. He's going to be talking about options a week from this coming Wednesday, June 16th, for an hour, and he's going to be talking about a framework for finding trades for options expiration plays. So since his first white paper, it says, Stocks and Commodities Magazine in 2004 on asymmetric, I want to say asymptomatic because we're living in COVID, asymmetric trades means they're not equal on either side. Symmetrical is equal, right? Asymmetrical is not equal. Asymmetrical trades, small but high-risk trades of huge returns, allows those that are right just half the time, right? If you're basically risking 1 to make 10 or risking 1 to make 8, you don't have to be successful that often. Topics to be covered, how the option market makers place their bets, how delta-neutral strategies show the beliefs of options market makers, what is gamma hedging, how options expiration charts are made, the basic patterns of options expiration charts and what they tell a trader, what months are tough for this technique and why, what is a price pin risk? Dave talks about this many times on his program. Why do stocks pin so regularly to that price? Why you should consider exercising options, one of the strategies he'll talk about, and the indicators that Dave uses to plan options expiration trades. Looks to be a great webinar. I plan on attending it myself. I encourage you to check it out, folks. As I mentioned, you can sign up for any of Dave's newsletters, The Path of Least Resistance, The Technology Insider, or The Art of Timing the Trade Charts. And, of course, Dave will be doing his program live at 2 o'clock today as well. All right, what else we got going on? Facebook. They're reportedly planned to end the policy that exempts politicians from some moderation rules. Interesting. They're always in the press, right? Former President Trump still banned from that platform. That one's not going away. as we got the 2022 election season already looming, 2024 presidential season looming as well. Facebook going to continue to catch some heat from both sides of the aisle probably on that deal. But Facebook, talk about persisting. I just want to pull up their chart, folks. You think they got problems? Facebook's got no problems. They are just trading to higher territory across the board no matter what happens. You're trading at 328 right now, and I think they're pushing $1 trillion right now. Where are they? Come on. Where's our fundamentals? What are we doing? What just happened here? Something happened. Not sure where that went. There we go. Fundamentals, $930 billion market cap on Facebook as we persist higher to 328 for that equity. All right, what else we got going on? In terms of headlines we got up here. Yeah, let's jump around to, well, we'll talk about Bitcoin. Yeah, this is the one I want to talk about before we jump around. So you had Bitcoin slumps after Musk tweets broken heart emoji for the token. I mean, this is real life, folks, whether you believe it or not. This is how the market is working right now. This is the tweet you had out there. So 9 o'clock last night, June 3rd, Elon, Bitcoin with a broken heart emoji. They got a Linkin Park song on there. In the end, doesn't even matter. Nonetheless, not what you want to see in terms of support when you got Elon, who runs Tesla, that owns $1.5 billion of Bitcoin, or at least they did at one point, and Bitcoin. Zooming in on the action that we had, you see the action, and can you find 9 o'clock on the chart last night? Somewhere around right there, right? There's your drop-off. We were trading at above 38,500. You got Bitcoin. It's remarkable, folks, the influence that Elon Musk has, that he can send Bitcoin down about $3,000, all right? He is a brilliant man. If you don't think he's well aware of the moves that he's creating with everything that he tweets, then you're just not paying attention, okay? He's not going to tweet this out to pump his own book of Bitcoin. You don't know what's going on with that. Just be wary. It's not how things are supposed to work. And Elon knows it, and he's playing the game as well as he can, able to basically influence markets across the board. And that's not how it's supposed to be. You're not supposed to be able to manipulate markets, and Elon's Twitter account is manipulating a lot of markets. All right, let's jump around to some of the FANG stocks today. Amazon charging higher, up about 1% after pulling back this week. We're trading at 32.16. You had Apple. Apple was lower by more than 1% pre-market, but now we're up 1%. 124.80 right now. And I guess maybe it wasn't that much lower. I saw a print on them pre-market. I'm pretty sure that they were, maybe it was right at 8 o'clock when they were trading at about 123.23. Not sure. Nonetheless, Apple up about 1% as well. Microsoft shares charging higher, up 1.4% right now. We'll jump to notes and bonds because these tech stocks probably loving the idea that we're getting some higher price and lower yield right now, as we have. And I talked about it at the top of the program, and we got it. We got a yield now of 1.59%. I mean, we're down like 5 basis points just since I started the show. We'll put this on a 1 minute to see the full scope of things. There's your 830 volatility. You pair things by 840. And even since we were on the air at 9:14, you were trading at 131.25. So we've risen 6 ticks just during the program right now. We're flirting with a 132 handle in that 10-year. And you really want to back things up. Really interesting area. I've pulled this up many times, folks. You put it on a 3-year weekly. You go back to the full run we had in the 10-year from October of 2018. You rise up to the highs of COVID at 140.24, and then we pull back to the exact 382. And it's always awesome when the 382 correlates to another area on the chart in terms of the area. We're talking about basically 132, we'll call it. 132 had been resistance going back to the end of 2019. We plowed through that area as COVID was exploding, and we pull back. And where did we pull back to? An area of resistance may turn into an area of support. Now, we've had some volatility, right? These are weekly bars that span basically from 130.26 all the way up to a high of 133.16. But when you put things on a longer-term time frame, we are just chopping around at that level of a 382. Also interesting that it correlates back to this area, 131.31 right now in the 10-year with a yield of 1.59% going on. All right. Checking around to some of the other stocks, some of my favorites. Let's see how they're doing. Disney shares. Speaking of Fibonacci's, always got Fibonacci's all over my charts, folks, and you should too. Bounced off that 382 of the full run it had from November up from October, end of October, October 29th, actually, the technical low there on that trend beginning at 117. Remarkable, right? When you think about how the world changed overnight, we got the efficacy numbers for the vaccine. You trade from 117 to 203. Disney maybe getting a little bit ahead of itself. You pull back to the 302. It's pounced a bit from there. Uber's had some real volatility as well. Yesterday, pulled back pretty harshly. Uber, that same chart, you look at where we started in November, you pull back to a 618. So Disney did the 382, Uber's doing the 618. You're sitting right at about the 50% right now for Uber shares. All right, folks, stay tuned. We got the S&Ps up 23 points. We'll be coming back to finish up the show, and I'm going to be talking about some of those Russell stocks and the impact they've had with some of the Reddit stocks. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Interesting article news out here. You have Google moving parts of YouTube to its cloud service. So interesting, some of these big tech companies, right? That you have a company like Google obviously getting into the cloud. Their YouTube service actually not on their own cloud, and that's what's going to happen. So they're moving to the Google Cloud platform. That's the leader, Thomas Kurian, maybe, the leader of Google's cloud division, said the popular video app has run on Google's own infrastructure separate from its cloud, along with other top Google properties such as its eponymous eponymous, search engine. Nonetheless, it'd be interesting to see how that plays out. Surprising it's not already on there. It talks about in 2019, Amazon said its consumer business had turned off its final Oracle database in favor of its databases from Amazon Web Services. You had Microsoft doing the same thing with LinkedIn, but Google Workspace Bundle, productivity app known as G Suite. YouTube's different. Second largest website on the internet. 2 billion users each month. I think there's only 7 billion in the whole world, folks. Google bought that in 2006 for $1.65 billion, maybe the smartest thing they've ever done. And you look at the revenue, 58% of the revenue Google makes up is from Google Search and other categories. Their cloud business, Google held only 7% of Google's business from the cloud, and nonetheless, you have Google, talk about an opportunity, holding only 5% of cloud infrastructure market in 2019. Amazon had 45%. Microsoft had 18%. It's 2021. CNBC's got to up their comparables there. And we're going to end the program as I talked about, folks. This is a graphic I saw on Bloomberg this morning. Interesting graphic. When you talk about the Russell 2000 and crazy things happening, look at the outsized impact these equities have had, AMC and GameStop in particular. Caesars is in there as well. They've accounted for almost 9% of the entire index's gain this year alone. Those three companies in a 2,000 stock index, folks. AMC is 4% of the whole gain. GameStop is 3.6. Caesars is 1.7. Ovintiv 1.1. Novavax 1.0. Everything else under 1%. Not surprising with the runs they've had, but be careful in that Russell. There's some crazy things happening right now in the Russell right now. Giving back some of those gains. What's going on? What's going on? Where are our GameStop stocks? Thanks for tuning in, folks. Thanks for starting your Friday with me. Stay tuned. Basil Chapman's up next. Live programming all day at TFNN. Great Friday, everybody.